Hey, Renter Retires, it's Adam Schroeder here with another episode, and I am pleased to be joined today by Tom Mulholland. He is the Senior Director of Strategic Initiatives and Capital Development at Pacaso. Tom, thanks for joining me today.
Excellent. Thank you for having me, Adam. I really appreciate it.
Absolutely. So we're going to get into something that we haven't really touched on this podcast before, and that's kind of the fractional ownership of properties and use of them and just kind of that world. But tell us kind of how did you get into this world? Because it sounds like it's kind of a technology driven, but still real estate asset driven, but also vacation thing. So how did you get involved in this space?
Definitely. So when you look at the vacation home market, not just in the United States, but internationally as well, there are a bunch of problems. The vacation home ownership conundrum. You own a vacation home, you maybe only use it 1 or 2 months a year. It sits vacant. You have to manage it. You yourself are paying for bills, utilities. Maybe you're renting it out. Maybe you're hiring a third-party manager to rent it out. But this asset class generally is vastly underutilized. Vacation homes, the millions of vacation homes in the United States alone, sit vacant 80 to 90% of the year. So this space, the co-ownership space, helps solve the vacation home ownership conundrum. With co-ownership, and I get to work with the company Pacaso, they're helping solve this problem. Co-ownership has existed for many years. Think a family that owns a home in Kiowa together. There are a couple brothers or sisters that own the home together. It's DIY co-ownership, but it's co-ownership. So what we're doing at Pacaso is we're professionally managing co-ownership to take all the hassle out of owning a vacation home. So we identified this big problem, the underutilization of these assets, and the pain it is to really own a vacation home. But also we saw the benefits of vacation home ownership. Our founders, Austin Allison and Spencer Raskoff, who are seasoned prop tech veterans, were lucky enough to own vacation homes themselves and see how much that could enrich their lives. They created second communities. They really could be their better self. They created family memories with friends, and they could be who they wanted to be at their vacation home in that place away from home. There really is no place like their second home, as we say at Pacaso. So that's how we got involved in the space. And I'm lucky to be working here, leading strategic initiatives and capital development and helping finance the business and put us in a position to operate and bring vacation home ownership to more people.
Okay. And so this is something we actually had to discuss beforehand to make sure I was understanding of it. And based on what your website talks about, many people think is vacation homes, using it for personal use, timeshare. Now this, and so I mean, that's really, some people go out, they buy a second home, they use it for a short-term rental, like you were saying. A lot of our people are doing that for tax advantages and being able to do cost segregations and save on taxes and all of that. But then there's the people who, you know, aren't doing that, but still want a vacation home. They think primarily of a timeshare. So how is this market that we're going to dive into in just a minute? I swear, people, we're just trying to cover the basics before we dive into kind of how you can utilize it and what good it does for investors. How is this different than a timeshare?
Yes, and thank you for taking a step back on the high level with me, Adam. I appreciate giving everybody a little perspective on where we're coming from, because I know this is a little bit different than what your community typically hears about. So co-ownership through Pacaso was set up to be significantly different from a timeshare with one main reason, one main point that makes it different than a timeshare. It's actual real estate asset ownership. So when you think of a timeshare, you think of maybe a condo unit in Florida run by Marriott, where you're accessing one unit from April 4th to April 11th. It may be the same unit, it may be a different unit, but there are a couple hundred different owners of this timeshare in this massive building. Now, Pacaso Homes, Pacaso co-ownership is usually a group of 6 or fewer families sharing one single family residence. Now, they're only one person's using it at a time, but each of the owners of the home, they actually own the real estate asset. And that's why it's a key difference between a timeshare, because you actually own the real estate asset, which you can buy and easily sell in the Pacaso system. We help facilitate that. You can buy it, you can sell it. That's the main difference, but also there are differences just about the type of homes. Of course, the single family residence that I mentioned, the scheduling, you set your schedule, you own your ability to stay and schedule stays at the home.
If you want steady income without the headaches of property management, Ignite Funding has a solution. Invest in loans backed by real estate projects and receive monthly passive income starting at $10,000. It's secure, hands-off, and reliable. Call Ignite Funding now at 702-739-9053. Again, that's 702-739-9053. Your investment, your income, your peace of mind.
Are you ready to grow your real estate portfolio with rates most investors can only dream of? Rent Retirement and BLUPRINT Home Loans have teamed up to bring you exclusive investor financing with rates as low as 3.75% on a 10-6 ARM and 4.375% fixed for 30 years. You can even close DSCR loans in as few as 14 days, giving you the speed to act fast in today's market. And if you close before year end, you can still take advantage of 100% bonus depreciation for the 2025 tax year. Don't wait. Limited builder allocations are available now. Visit rentretirement.com or connect with BLUPRINT Home Loans to get pre-approved today and start building wealth through real estate. Okay. So this is fractional real estate, and obviously it's fractional real estate for owner-occupied, but fractional real estate in and of itself is becoming a thing as technology increases. So what do y'all see in the future for this fractional real estate? Like, is it something that you expect to continue growing, or is it always going to be kind of a niche market? Or what, in your opinion, whether it's for investors or for, owner-occ or vacation homes or whatever, how do y'all see the future of fractional ownership working in the world?
Definitely. We definitely see a strong trend toward fractional ownership increasing, whether it's in the real estate space or many different asset spaces. As we've seen over the last couple of years, this is definitely a booming trend that we anticipate continuing, because we're finding that investors have a lot more of a why. People that are interested in fractional investing have a why. They see firsthand that owning assets can help maybe set them up for financial freedom. Maybe it can help set them up to have a vacation home that they use 2 months a year, and then they're able to rent out through a different system. So investors have a why, and fractionalizing assets allows more players to play the game. It brings people off the sideline. It lowers the barriers to entry. The same, like Pacaso, the same $8 million home that one person could buy in the past now could be purchased by 8 people for $1 million each. And that's Pacaso. It's luxury real estate. But think about fractionalizing a lot of different other assets. So you and a friend want to buy into a triplex. You're going to rent out that third unit. You're fractionalizing the ownership or co-owning that triplex. And your why might be renting that out. It's helping cover the mortgage, setting you up for financial freedom, and giving you a place to live. So we're finding that the why that investors have, we think that is helping push the trend of fractionalization.
And what are the dangers of it? I mean, everything has a trade-off. So what do investors need to think about when they are investing in fractional ownership? Whether, like I said, whether it's primary, vacation, investment things, what are the trade-offs that you're doing? What are the dangers as you're doing your due diligence? I know y'all raised a bunch of money recently, and people had to do their due diligence to make sure that they got into the right thing. So what are the dangers of it?
Definitely. And that's the biggest key I would call out. Making sure the systems are set up front to deal with future risks. Whether you're fractionalizing that triplex and owning with a buddy and renting it out, how are you and your buddy going to deal with the tree falling through the roof? How are you going to deal with disputes? Do you have an agreement set up front that helps you deal with those disputes later, so that if you get into a dispute situation, one of you is not walking and then you're unable to figure out the issue, and then you're kind of stuck with an asset that you're not sure if you can sell because both of your names end up being on the LLC. So it's setting up those systems up front. How can you, the buyer of a fractionalized asset, understand how disputes will get resolved, and then how you can sell the asset if needed. So it's really a lot of diligence up front, whether it's you setting it up or you're buying into a different fractionalized asset through any other platform. It's making sure you understand the risks of that specific asset and how you can sell.
Okay. And y'all did a capital raise that kind of, I don't think a lot of people have heard about, and it's kind of shocking and potentially, I mean, just mind blowing to me, because, and it's not the amount that you raised. It was a Reg A raise, which I don't really know what that means. I'd love to hear about it. But y'all had 17,000 investors, and that seems like a lot of investors to come into a company. What is what does that raise mean? Is it something that more companies are going to be doing in the future? And kind of how does that whole thing work?
Definitely. So we started learning about this type of Regulation A investment offering 3 or 4 years ago at Pacaso. We started researching and getting a grasp of what it really was, because we did see a few companies have success in this offering. So Regulation A essentially allows private companies to access public capital. In other words, public everyday investors can invest in venture-style private companies. From a company perspective, you need to file, get qualified with the SEC. So it's a very regulated space. And there are definitely some hurdles to jump over, from audit requirements to ongoing reporting. Operating in a quasi-public space after you complete one of these rounds, but it allows, again, it's democratization of assets. Just like Pacaso democratizes assets, ownership to vacation homes, Regulation A democratizes access to investing in private companies. So we pursued this opportunity for a couple different reasons. So Regulation A, once you get through the hurdles, make sure you're transparent, providing all the documents for investors. It's a big marketing exercise. So we now have 17,000 people that are on our cap table that literally own a stake in Pacaso, the company, not an individual home. They own a stake in the whole company, and maybe a customer. Maybe they will be a customer in 1 year, 5 years, 10 years, 20 years. But we're playing the infinite game, thinking about this capital raise. And we're very excited to have brought on 17,000 plus investors in this capital raise that will help fuel the Pacaso flywheel. They'll push us to be better from a product perspective. They all have that why. They see what we're offering. They see the vacation home ownership. They see the dream. They call in, they ask, we have these investor relations conversations, and they invest. And we saw incredible demand during this round. I think more companies will start to pursue this. You've seen in the last 10 years about 9.4 billion in capital raised through Regulation A, which was shocking to me to see in the last 10 years or so. I thought it would be a much smaller number, but companies are starting to get wind of this type of offering, understand what it means, and then understand the extreme benefits that come with potentially having thousands of new investors invested in the company.
BAM Capital partners with thousands of investors like you, providing access to these prime real estate opportunities. Through their full vertical integration, BAM Capital identifies the best markets, manages properties, and handles all the details, allowing you to relax and enjoy the benefits. Imagine owning top-tier properties and having the ability to realize capital appreciation. With BAM Capital, it's possible. Visit bamcapital.com/RTR to learn how partnering with BAM Capital can enhance your portfolio. That's bamcapital.com/RTR. Don't miss out on this opportunity. All right, thank you for that. And so looking at your properties, I think one of the things that might be interesting to people about it is you're not putting like $300,000 homes on these on your website for selling. These are, $1 million+ properties that if you were to go and buy yourself, most people wouldn't be able to afford it. So let's talk about the actual ownership of these assets. You mentioned, owning it with 5 or so other property owners. You mentioned kind of the booking of it, but from an actual ownership standpoint, kind of how is that structured? Because, I'm not going to go and put my name on a loan with, Bob and Tracy and Jill and, Joe. That's never going to happen. We're never going to be able to get a loan for that. To put it kindly, we would never qualify for a loan together like that. So how is this deal structured, and how does it protect investors?
Definitely
Do y'all call them investors, or do you call them owners, or what do you call them?
owners, because they actually own the home. And that's the key to the whole system. They actually own the home. Pacaso does not retain ownership interests once we sell through these homes. The owners own them. So we do call them owners. But you're right. You don't want to have to go to the bank and get a loan with Bob and Jill and Tracy and Joe. And we facilitate all of the financing for these co-owned homes. So you're right. Our average home purchase price is around $5 million. They are definitely luxury vacation homes. So how we structure the deal, let's just say we're purchasing a home in Vail to become the next Pacaso home. So 123 Main Street LLC will form that to purchase the home 123 Main Street in Vail. So the LLC takes title to the home. The LLC will be the entity that holds the mortgage. You don't individually have to go out and get a mortgage. You don't have to go get a loan to acquire the home. We take care of that. So 123 Main Street LLC holds 123 Main Street in Vail, and there's a mortgage on that property. So now where you come in as a buyer, and most of our buyers typically don't know any other buyers. Everybody typically prefers to remain anonymous, and that's a great part of the system. You can buy into a co-owned vacation home. You show up, your items are there, your personal items are there, you can enjoy your vacation, and you don't have to worry about the other owners. We take care of all of that and the hassle. So that's how the ownership is structured from an acquisition. It's a LLC, simple LLC structure. And then from an owner standpoint, you can also finance your purchase. So if it's a $5 million home and you're purchasing, let's just say 1/5 of that for $1 million, you can finance directly through Pacaso, and your loan only affects you. So let's say you've got Bob, Jill, Tracy, and Joe who also take loans to acquire their ownership interest. Their loan doesn't affect you. We facilitate all of that through Pacaso, so you don't have to worry about any of the other co-owners.
Okay. Do you know if any of your owners are utilizing it as kind of a semi short-term rental? Like, are they renting it out, or are all of your owners like actively using it for their vacation home?
Yes. So we identified the problem of the owner of a vacation home who isn't renting it out. They want to own a vacation home for personal use and enjoyment. And that's what Pacaso does, personal use and enjoyment. So it's actually prohibited in our operating agreement. So when you buy and become an owner, you can't rent out your unit. You can't rent out your membership or your time. You own the asset. So do several other owners. We want to make sure our owners all have an ownership mindset and treat the asset well to give it a long life. But also, Pacaso homes end up being used around 80 to 90% of the year just by people scheduling personal use and enjoyment time. They go there with their family, their friends, they gift a stay to a child. So it's owners and their vetted guests that are able to use this home, and they're not renting it out, which again is why it's a little bit different than maybe something your clients are typically used to hearing. It's a different model at Pacaso.
Yeah. So maintenance wise, because maintenance can eat you alive as a homeowner or an investor or whatever. Is it like, do y'all do a check after every visit and say, Adam, you put a hole in the wall, you're going to owe this? Or is it something that you go through and do maintenance as it happens and you'd split it up between the 5 or 6 of us?
Yes. So of course it's fact and circumstance dependent. If there's a tree that falls through the roof, that's a different situation than if you, Adam, put a hole through the wall. And that one would fall on you to make sure you're covering the cost to replace it. Bob and Jill and Tracy and Sue don't have to worry about you putting a hole in the wall. We'll check. We have a team, and we are operating in about 40 different markets. So we have teams in these local markets that check and make sure the home is in Pacaso-worthy condition for every future stay. So if you're staying now, Adam, and then Susan's staying next, when Susan gets there, that hole in the wall should be fixed. Susan shouldn't even have to know about it. Everything's taken care of from their perspective.
Okay. So when it comes to getting into a property, whether it's primary vacation investment, one of the things we talk to our investors about is having an exit plan for that property. Knowing whether you're selling it to an owner occupied or, potentially an investor, or if you're going to have to go to, a commercial building or something like that. When you go in and you want to sell this property, is it you're selling to another individual and you're just selling like the stake in the LLC that you're doing, or do you, how would how on earth would I market that like to the outside world? Because I don't think if you threw something up on Zillow and said buy 1/6 of 123 Main and Vale, I'm going to get many hits.
Right. So that's, again, another place where Pacaso comes in, because the whole system only works if you're able to easily, quickly resell your share. So let's say you own a quarter of that LLC, 123 Main and Vale. You can list it directly with us. We'll do the marketing. We have our local team. We'll help with, just like a real estate agent would, competitive market analysis, helping you set the price, and being able to understand the liquidity and ability to sell that specific share. So we are building our ecosystem in these markets. A lot of homes you'll actually see, if you're on Pacaso's website, have a wait list. So let's say that home in Vale, we try not to oversaturate. We try to make sure that supply and demand is balanced correctly. But let's say an owner's interested in selling sometime in the next year, we'll start to market. We'll start to generate interest. We work a lot with local real estate agents. They're excellent partners, but we can facilitate the sale as well, just like a regular real estate agent would.
Okay. So let's just run through a quick scenario here. I don't know if y'all have experienced it or not, but we buy that property in Vale, and after 15 years, it needs an update. The kitchen's outdated, or maybe somebody needs to have X, Y, or Z done. How does that part work? Because if 3 owners want to spend 20 grand to put in a pool, let's just say, that'll probably one of the easier things to say than like a kitchen renovation. 3 owners want to put in a pool, 2 owners say absolutely not, I don't want to spend the money doing that. There's a community pool a block down, we can use that. How do interactions like that get worked out?
Definitely. And that's a big difference between what I would call DIY co-ownership and Pacaso. So if you're owning with a couple of friends or you're owning with family members, you may fight about that. And that may be an issue that creates tension and something that you can't overcome or figure out. So part of how Pacaso works in our operating agreement, so when you're buying into 123 Main Street LLC, you're signing on to an operating agreement that outlines specific rules and procedures for repairs and maintenance, necessary repairs, optional repairs. So let's say the couch has a hole in it from wear and tear. You call that a necessary repair. Pacaso works in the budget every year to build in reserves, just like you would if you're buying and owning your own vacation rental. You want to make sure that there are reserves. If the roof needs to be repaired, things come up, Pacaso builds in reserves. But these more optional repairs come down to a vote. So Pacaso facilitates that vote. As I mentioned, a lot of the owners prefer to remain anonymous. So everything goes through us. We'll put out the vote. Let's say one owner wants to renovate the kitchen or add a piece of artwork or add a hot tub, anything like that. They'll put it to their local home manager, and then we as Pacaso can facilitate the vote. And in that operating agreement, we outline different levels of vote required to pass something. So 4 out of 8, 5 out of 8, 6 out of 8. Most Pacaso homes are 1/8 interest, so it's typically out of 8. But it's put up through a vote through Pacaso. We help facilitate manage. If it's something optional, like changing a piece of artwork, and the vote is no, that's the consent of the owners, and we go from there. And if the opinion is yes, that we meet the threshold, we'll replace that piece of art.
Fantastic. Well, Tom, I want to thank you for joining us today and going over everything. Like I said, fractionalized real estate investing and purchasing is not something that we've covered. So I appreciate you covering it and telling us about Pacaso. Please tell us where our investors can learn more, and if you have any thoughts on kind of the future of real estate, whether that's with vacation homes in areas, because I mean, some of these areas, remember, people, you could go and invest and get yourself a short-term rental and have it alongside of a Pacaso house. So tell us about kind of your thoughts on the real estate market and kind of how people can find out more about y'all.
Definitely. You can always find more about Pacaso at pacaso.com, Pacaso.com. But really what I'd like to leave your listeners with is the idea that access to investments like this, private investments, investing in private companies is becoming more accessible than ever. And it's up to you, the investor, now that you know about this space, take a look around, look for these types of Regulation A private offerings. Do your diligence, read, learn about the company, reach out, ask them questions, learn about the space, and see if it matches your goals. So I'd encourage you to check it out as investment continues to become more accessible.
Fantastic. Well, Tom, again, thank you so much for joining us. For everybody, if you want to get a hold of us, you can head over to renttoretirement.com. That's renttoretirement.com. You can see our inventory there. You can schedule a call with us. We can talk through anything and everything you want to talk about along your investing journey. Don't forget, if you have any questions you want us to answer in future emails or any questions you want me to pass along to Tom, or any, if you want to come on and share your story. I mean, you hear client success stories all the time. If you want to come share your story, email podcasts@renttoretirement.com. That's podcasts@renttoretirement.com. Really appreciate the time y'all spent educating yourselves today. We'll talk to you on the next episode.
Thanks for watching the Rent to Retirement YouTube channel. Check out some of our other videos, like this one, or this one here.